Hello, future homeowners. Welcome back. We're your mortgage moms, here to clear up one of the biggest myths about buying a home.
That's right. You do not need 20% down to buy a home.
Let's break down how much you actually need, what your options are, and how a smaller down payment impacts your mortgage.
Today on Mortgage Moms, the truth about down payments.
A lot of people think you need to have a 20% down payment to buy a home. Not true. This is where PMI, or private mortgage insurance, comes into play. It's something a lot of first-time homebuyers end up paying, and honestly, it can be a bit of a mystery.
Exactly. If you make a down payment of less than 20% on your home, you'll probably have to pay PMI at first. This is an insurance that reassures your lender that you are serious about paying your mortgage, even with a smaller initial down payment.
But not to worry. PMI isn't a forever thing. Once you reach a certain amount of equity or value in your home, you can ask to have it removed. So it's just a temporary thing to help you get into your home sooner, especially if you're not in a spot to be making a 20% down payment.
Let's dig more into down payments, or the initial deposit you pay on your mortgage. You've probably heard the debate about high versus low down payments. What's the best choice?
Well, traditionally, people say you should expect 20% down to buy a home, but that's not always the case anymore. No need to feel down about your down payment. There are plenty of loans where you can put as little as 3% or 5%, and even some options that don't require a down payment at all.
Here's the thing. You can put down a lower amount like 3% or 5%. The trade-off is that you're probably going to end up paying PMI. You're getting into your home with less upfront cost, but you'll pay a little more each month until you get 20% equity.
On the flip side, if you can manage to save up for a higher down payment, say 20% or 25%, you may be able to avoid PMI altogether. That's a huge win. But keep in mind, putting down a large down payment means you'll need to save more upfront.
Right. And putting down a bigger chunk means lower monthly payments because you're borrowing less. But it might also mean you have less cash left over for emergencies or other financial goals. You need to figure out what works best for you.
And of course, it's not just about the down payment. You've got to think about your lifestyle and what you're comfortable with. Can you handle a higher monthly payment with a smaller down payment? Or would you rather go for a lower monthly payment with a bigger down payment?
It all comes down to your personal financial situation. There's no one-size-fits-all answer, but with a little planning and the right advice, you'll find what works for you.
So to recap, PMI is something you'll deal with if you put down less than 20%, but it's not forever. And when it comes to your down payment, the more you put down up front, the less you'll pay each month. Just be mindful of that balance between upfront cost and long-term payments.
That's right. And remember, we're here to guide you through every step of the process. Until next time, these are your mortgage moms signing off.